Welcome to the Daily Update Podcast, where I'll go over the action in the market for Friday, October 31st, and we'll see how things look for Monday, November 3rd. Recapping Friday's market action, the S&P 500 closed up just 0.26%, finishing almost exactly at the daily pivot at 68.41. After a strong open above the R1 resistance at 68.62, that sent the intraday high for the day. Selling took over later in the day, only to see a nice rebound, but by the time the close came, we were virtually unchanged. Volume was above average. Some highlights of Friday's session include Amazon's earnings, which produced a surge of 9.5%, and Apple earnings left a close slightly lower. Looking at the big picture, the ADX trend indicator confirms that the S&P 500 is not trending in the short and intermediate term, but the S&P 500 remains above the 20, 50, and 200-day moving averages, which is a bullish alignment. The long-term trend is still up, but the S&P is more than 10% above its 200-period simple moving average, a stretched condition historically associated with a pullback. On the positive side, the Parabolic SAR remains bullish, as does the Vortex. Longer term, growth is still outperforming value, but in the short term, it is showing some weakness. Seasonality favors the bulls, with November and December being very positive, going back to 1950. The warning signs, however, are starting to stack up. There is a confirmed Hindenburg omen. The mass index is predicting a reversal to the downside. The McClellan oscillator and summation indexes for the S&P are negative, and all three smart money indicators are negative. Inside of the S&P, stocks above their 20, 50, and 100-day moving averages are deteriorating. Discretionary to staples is still positive, but in the short term, stalling at its 50-period moving average. And the financials continue to underperform the S&P 500. Looking at sector and mega cap stocks. Mega cap highlights include, as stated before, Amazon closing up 9.51%, but closed near the lows of the day. Tesla was up 3.74%. Apple ended up closing slightly lower. Microsoft was down 1.5%. Meta is now trading below its 200-day moving average. On the bright side for Friday, small and mid caps did outperform, fueled by lingering rate cut hopes and the possibility of doing some bargain hunting after declines. Looking at the macro picture, the 10-year yield rose to 4.1%. up sharply from being under 4% just a few days ago, and rising since the Fed came in and cut rates. The dollar index is holding up, but watch the 100 level with the US dollar index. A decisive break above could pressure stocks. Gold has been pulling back, but is near the 4,000 level and rebounding, while the VIX remains below 20 but has been ticking a little bit higher. As far as Fed speak, Kansas City Fed President Schmidt and Dallas Fed President Logan both pushed back on December cuts, saying that they are hard to justify cutting in December without clearer data, as the market is cooling the odds for a December rate cut pretty quickly. Looking ahead to Monday, November 3rd, November 3rd has been historically positive from a seasonality perspective for the Dow, S&P, and NASDAQ. The first 5 days of November typically can be quite strong. On the bullish side, we do have seasonality as a tailwind. Earnings momentum is still solid. Corporate buybacks is seeing the window close for announced future buybacks, and the soft landing narrative is still dominant. On the negative side, the Hindenburg omen still remains confirmed. The smart money indicators, as stated before, are all negative. The financial sector is showing some weakness and continuing to underperform the S&P, and the short-term positive momentum has pretty much evaporated into nothing. The government shutdown continues, and any economic data may end up being delayed. In conclusion, the S&P 500 is in a choppy, trendless, internally fragile state, but the long-term trend is still supported by seasonality and structural bullishness. The risk-reward skew is tilting a bit cautious, leadership is rather narrow, negative breadth is widening, yields in the dollar are rising, and the Fed may or may not cut rates at the December meeting. The big picture is still positive, but it's lacking conviction and a loss of short-term momentum. Growing cracks beneath the surface are starting to show their wear. Thank you very much, and I will talk to you in the next podcast.